everyone. I hope I'm well audible to everyone. We'll be starting shortly. So Aditya will be joining in some time, and then we start with the session with an overview of the sector as a whole, and then we will take questions which will be relevant questions. Please do not ask any buy, sell, or hold kind of questions. If you have any questions related to any business view or maybe furtherance to your understanding, then definitely we'll try to take those questions. But please be wise with your questions. And meanwhile, good evening, Aditya.
Hi, can you
How
hear
are you,
me?
sir? Oh, yes, yes, loud and clear.
Awesome, awesome. I'm good. Yeah, how are you?
All good, sir. All good. Long time.
Yeah, long time, man, long time. Actually, when I had come to Delhi, I had absolutely no time. My schedule was jam-packed here. But next time I'm there, I'm
Yeah,
gonna
yeah.
keep
I,
a
I,
Saturday or
I
Sunday.
saw that. I saw that tweet later. Otherwise, I would have come to
The event.
Gurgaon.
Ha
Actually,
ha.
that's not 1 hour drive to my place.
Next time
Anyway,
I
so sir,
recommend. I'll keep a weekend.
डन है सर. सो सर एक दो मिनट वेट करते हैं, लेट पीपल ज्वाइन इन और फिर ओवरव्यू के साथ स्टार्ट करते हैं एंड देन वी टेक रेलेवेंट क्वेश्चंस
Ah,
फ्रॉम
let's
द
do that. Let's
अटेंडीज.
do that. And we'll do the disclaimer also before we start.
And those who are regular attendees very well know that these sessions are purely educational. Please take the session and learnings as a starting point. By no means we are here to influence anyone. Assume that we have vested interest if we are talking anything, and take that with a pinch of salt. Do your own due diligence and consult your financial advisor in case of any financial decision on your part.
Has become extremely proficient at the disclaimer, by hosting spaces.
सर ये सेवी बीच बीच में डराती रहती है. So it's always good. And moreover, sir, like honestly, we have no such kind of thing, and we do not want anyone to take डिसीजन ऑन दीज डिस्कशन. बस ये है कि अपनी अंडरस्टैंडिंग एक्सपेंड करें और उसके बेसिस पे दे कैन श्योरली टेक
नहीं,
डिसीजन.
actually, हमारे compliance से भी advisory आई थी, and they say that look, what is the upside for you for participating in such spaces, and the downside is just SEBI flags off something, then you get in trouble, so on so forth. So मेरे को भी मतलब from an organization standpoint also we had to take a stance. We had to say that look, we want to impart what we know. If you institutionalize a thought process or a research framework or you publicize it, a lot many people benefit from it, and that is what you really seek in these spaces. And it's not about giving buy sell recommendations. So our compliance said, but look, what is the upside? And the downside is if SEBI sort of objects to anything at all. uh, so we had that argument, but I still continue to believe that it makes sense to share what you understand here. India as a equity market, we are still very, very shallow in terms of understanding depth of the market, width of the participation. VVFI is a significantly higher percentage of volume in our market. Um, that will change. That will change as it has changed in most developed markets. It will change for our market also. But we need to play our role here. I think that's what.
And on the top of that, the quality of questions and understanding of business from our audience is
Yeah, yeah. It has improved over a period of time a lot, and that itself is a testimony कि future bright है. अगर आप current trend को extrapolate करने को ready हैं, तो clearly the retail is getting to a point where I think the Indian retail will be able to outsmart institutions because institutions have their own compulsions, the retail doesn't, and I think that is something that will be really beautiful to see, and hoping and believing that that will happen someday.
great, sir. We look forward to that. So, sir, we can start with your disclaimer, and then we can have so as to set the backdrop of today's session, what we spoke
Sure.
last, and how you see things evolving at this point in time.
Absolutely. So first of all, thanks everyone who has joined this evening. I am Aditya Khemka. I manage a healthcare portfolio at this company called Incred Asset Management. Um, this is a healthcare PMS that I manage. Other than that, I also manage a couple of mandates on the diversified side. Um, but my history and my past has been more dominated on the healthcare pharmaceutical side. But I also manage diversified funds, so we can have some discussion on that side also if there are questions on that side. Uh, Standard disclaimer, since I'm a fund manager, talking stock specific will be an issue. There will be no buy or sell recommendations. I may take certain names from a case study educational standpoint. Do not take them as buy or sell recommendations. You should assume that we have vested interest in almost everything that we say or we discuss. And before taking any decisions, just consult a financial advisor. That's the best way to invest. Financial advisors are there in the market for a reason. What fits my portfolio, my framework may not fit your portfolio, your framework. And that's where your financial advisor steps in. So it's extremely important that you guys make use of the services of such people so that you can understand what's best for you and what will work for you. um, so that's on the disclaimer side. Coming to, let's say, a 1 minute opening remark, I think we have been talking about healthcare stocks a lot in the last 1 year or so. Great to see that in the last 6 months, healthcare has done a lot of catch up with the broader market. It was significantly underperforming the broader market 6 months back. Last 6 months have seen a great catch up. Uh, I think they are outperforming the broader index by roughly 15% or so in the last 6 months, uh, which is basically a catch up of what they had lost in the last 2 years. So it's not that it's outperforming over a 3 year period. I think over a 3 year period now the returns of healthcare and broader market are largely similar. Couple of points here or there, but largely similar. Uh, but a majority part of this catch up has happened over the last 6 months. The reason why they underperformed for the prior 2 years and why it's catching up this year, I think that's important to understand, because unless you understand history, to understand future becomes extremely difficult. Um, so last 2 years, healthcare companies and more specifically pharma companies had a significant setback uh, on multiple fronts. Front number one, volume growth. Now, volume growth was an issue across businesses simply because during COVID times, there was a lot of volume growth that had come into, let's say, API businesses or let's say diagnostic businesses and other businesses of these types where there was temporary demand. Now, what was this temporary demand? This was basically, let's say, in terms of COVID, in terms of diagnostics, it was RT-PCR tests, COVID-related tests. In terms of API companies, it was stocking by the customers because the customers were afraid of the supply disruption, so they wanted to keep 1 or 2 year of inventory versus regular, let's say, 3 to 6 months of inventory that they would have otherwise kept. Um, so that was one issue. So these stocks were basically getting rationalized over the last 2 years since the unlock. And in diagnostics, the RT-PCR test just went away. So that resulted in volume declines, um, significant volume declines. And basically what also hit them along with this was the fact that there was inflation in the raw material prices. So three costs had inflated significantly. It was raw material, it was carriage cost, and it was power cost. All three costs had significantly inflated. All three had to do basically with disruptions coming from China, by and large. Um, the containers were a different issue in terms of rate cost because there were significant container supply challenges. The Suez Canal had jammed up, and container prices had quadrupled in certain cases, as I have been told by the industry. Uh, Coal prices had inflated, and therefore the cost of thermal energy had gone up. And most importantly, raw material cost had gone up because China um, was not able to supply chemicals regularly because they had the zero COVID policy still going on, and because demand was where it was, but supply significantly contracted, the prices of these raw materials inflated significantly over the past 2 years. And that basically had a very significant impact on the gross margins of almost all pharma companies that I look at. Um, and what has happened in the last 6 months, why there has been a catch up of the healthcare sector versus the broader market, is that all these costs are now cooling back. So the inventory is sort of now normal at the customer end. The RT-PCR test base is gone. So you see normal volume growth coming back to the reported numbers. You see margins coming back because China is now producing chemicals. It's dumping chemicals again into India, so chemical prices are falling significantly, and that is helping gross margins. Container costs, power costs, coal prices have declined. Container costs have declined because containers are now available uh, as they were available normally, and that all is basically driving the margins and the volume growth in various subsegments of healthcare, and that is basically what is driving stock prices. So a lot of people will have this question that last 6 months, let's say the healthcare sector has rallied about 30 to 40%. So do you feel the catch up is done? The answer, in my view, is no. Uh, because if you see, the sector lost almost 600 basis points of EBITDA over FY21 to 23. And what we have made up this year so far is almost about 250 basis points of EBITDA. So there is a good 300, 350 basis points of EBITDA left to recover. That should happen in the next 1.5, 2 years as costs normalize further and as prices are further increased to make up for lost margins. But obviously, this is a projection and this has certain risk attached to it, especially given what is happening in Israel, Gaza, Hamas issue. If the oil prices spike, oil prices are so solvents that are used in pharmaceutical products are largely oil derivatives. And if oil prices spike, it can have an impact on container cost, it can have an impact on fuel cost, it can have an impact on raw material cost all over again. But for that, the oil prices need to remain elevated for a certain period of time. A spike of a month or two or three would not impact as much. But if it is elevated for, let's say, a 6 to 12 month period, then it will start having an impact. I say so because there is generally inventory and contracts involved in these services and products. So if there are fixed price contracts or services which are contractually bound in terms of prices, then a 1 or 2 or 3 month spike doesn't really impact cost. But if the cost remains elevated for 6 to 12 months, then those contracts come up for renewal, and then the renewal happens at higher prices because the input cost for the vendor has gone up. Um, so whether oil prices sustain at a higher level or not for the next 6 to 12 months, your guess will be as good as mine because there's a lot of geopolitics involved in oil and crude, etc. So I'm not going to get into that. Uh, but yeah, that is a risk factor to earnings if it happens. And it can impact earnings to a certain extent. How much extent depends on how much oil prices go up and how long they stay elevated. So these are variables that we can't predict today. Um, so overall, the outlook for the sector is optimistic. Margin recovery has happened in the first half. The second quarter numbers will be out soon, and we will see. We are hopeful of seeing good margins again after the first quarter, which was good margins for across the board for pharma and healthcare companies. Second quarter should also be good margins across the board. Um, and then we'll see what happens in the third and fourth quarter, depending on how oil behaves. Oil is a variable, but not a very large variable. The larger variable is China and the ability of China to keep supplying smoothly. I think that is currently at least not under question. But if that also comes under question, then that will represent an risk to our earning estimates. So that's broadly my opening monologue, Prince. Should we open the floor for questions?
Right, sir. So, sir, although not sure how much government is saying just for the sake of saying, or government is actually focus on the quality, and I have seen like government's focus on Jan Aushadhi. So it appears to be contradictory in the sense Jan Aushadhi. Do you think that the quality, I mean, is one which the beneficiaries prefer, or would it make any structural difference, or this shouldn't impact big time, sir?
So there are two, three things here, Prince. Let me throw light on all of it. So first of all, Jan Aushadhi is not a new initiative. Jan Aushadhi started sometime in 2008. Then it was called, I think, BOPP, Bureau of Pharmaceutical Products. Then in 2014, the current government sort of rechristened it as Jan Aushadhi. And we are in 2023. So 15 years, let's say, of existence of Jan Aushadhi. And the market share that they currently have is close to 1% or slightly less than 1%. So the availability of unbranded products is one part. The second part is the demand for unbranded products. I feel, or at least the data tells us that the demand for unbranded products just isn't there. Uh, in a particular state of our society, yes, there are certain poor people who go to government institutions, government hospitals, who don't have enough money to pay for branded drugs, and therefore they might be availing unbranded generics, and that's good because that's not a market which was ever a target of the branded pharma companies. That's a parallel market which the branded pharma companies could never target because there was no buying power there. So unbranded generics is essentially catering to a market which branded generics could never cater to because there was no pricing power, there was no purchasing power there. So unbranded generics has its own place, I think, in the marketplace. But is it a threat to the growth of branded generics? Probably not. And time will tell because then there is this NMC regulation that had come in, right? So National Medical Commission, they had come out with this regulation saying that all doctors need to write generic names only. Um Let me also inform the audience, this was nothing new. In 2002, MCI, Medical Council of India, which is now again rechristened as NMC. So MCI is NMC now. Earlier it was called MCI, now it is called NMC. So MCI in 2002 had also come up with the same regulation, a similar regulation. But again, it was not enforced because the ecosystem just isn't there to impact that. Further, NMC, when they came up with this regulation, saw a lot of backlash from all stakeholders, including doctors, pharma companies, distributors, chemists, because it is not benefiting anyone really, and not even the patient groups for that matter. Um, the reason for that is, intuitively, I can understand why one would say that unbranded generics are cheap and they will save money for the economy. But if you look at the empirical data, so let's keep intuition and what we think aside, and let's look at data, because I think there is a lot of disparity. Multiple times there are a lot of disparity between the two of what we think is happening or will happen, and what the data is suggesting is happening and will happen, right? So in the world, if you look at the 5, 6 largest unbranded generics market, US, UK, Western Europe, most of it, China, Japan, Australia, South Africa, all of these unbranded generic markets are far more expensive pharmaceutical markets than the Indian pharma market. So for that matter, many other branded generic markets like, let's say, Middle East, Philippines, Vietnam, Cuba, etc., etc. Now, so what the empirical data is telling us that when you have unbranded generics, the prices, the MRP for the patient is significantly higher versus what the patient pays when it is branded generic. Now, where the data gets a little cloudy is that for the pharma company, the realization in unbranded generic might be lower because the channel eats the higher part. And in the branded generic, the channel gets a lower portion, the pharma company gets a higher part, right? Now, you need to make a decision as a consumer. You need to make a decision that if you are willing to pay, let's say, 100 rupees for a strip of tablet, what do you prefer? Do you prefer 70 rupees to go to the pharma company, or do you prefer 70 rupees to go to the channel? Now, if 70 rupees goes to the pharma company, at least you can hope and pray and believe that the pharma company is using the 70 rupees to make good quality drugs in good controlled environment. But if 70 rupees is going to the channel, what are they really doing? How are they adding value to the product? So my simple admission here is that whatever empirical data at least I looked at, I know of the prices of unbranded generics in India today are by and large lower than prices of branded generics. Let me again reiterate, by and large. It doesn't mean all. Many unbranded generic drugs are priced higher than many branded generic drugs, even in today's market. And when I say priced, I again mean the MRP. So they are priced higher than the branded generic drugs, but by and large, they are lower than branded generics. But that to me seems like a foot in the door sort of a strategy, which all startups do in India. When they come, they make losses, they sell at lower prices to lure the customers, and then when they have the customer, they increase prices and they increase realizations. I think that's pretty much what's happening in unbranded generics in India today, and uh, the future could be possibly that if we go the unbranded generic way, what will happen is that over a period of time, as people get more used to unbranded generics, one, there will be a lot more self-medication. Two, the chemist will get far more authority to dispense drugs to you than the doctor. which again is dangerous because the chemist is not as qualified as a doctor. And number three, you'll end up paying a higher price than you were paying when it was branded generics. Because once the ecosystem is set to the unbranded generics, then the chemists and the distributors will sort of be able to extract more out of you versus what they're able to do today. Because in branded generic, it's a pull business. So the pharma company can dictate terms. In unbranded generic, it's a push business. So the channel will dictate terms. So that so having said all of this, is unbranded generic a threat to the branded generic business model? Yes. Is unbranded generic good for the patient? Not necessarily. Empirical data doesn't support that statement. Actually, patients in the world end up paying more for unbranded generics than they pay for branded generics.
Fair point, sir. So before coming to our speakers for our question, one question is from an attendee. So sir is asking like for hospitals diversification or concentration. If some hospital is India centric, so would you consider that as better, or the hospital which has diversified outside also? So which is better? And on top of that, at this point in time, what's your view on valuations as far as hospitals are concerned?
Yeah, that's a valid question. Look, I don't mind hospitals being diversified out of India. Uh, Actually, what we have seen in pharma has put questions in mind of people as to if services like diagnostic or hospitals go outside India, is it good or bad? Because in pharma, exports are not making money, so people are questioning the same in hospitals and diagnostics. Uh, my submission to that point is that wherever we have seen hospitals or diagnostics in India going out of India to cater to other countries, they've actually made a lot of money and they're currently making a lot of money. Uh, Pharma should have been the same way, but the US business made some structural changes. The Western European business made some structural changes, which adversely impacted our profitability. Initially, they were also very profitable. Back in 2010-15, they were very profitable. Uh, but then there were structural changes made, which made them unprofitable for us. And the supply demand issue obviously also came out in that. But in services, be it healthcare service delivery in terms of hospital or diagnostics, uh, I'm pretty optimistic that there is a big opportunity for all these companies outside India. But there is a large opportunity in India also. So they need not necessarily diversify, but if they do, I don't mind it, in that sense. So that's the question to diversification. To the question on valuations, I think, yes, hospital businesses valuations have run up significantly. Um, I don't know if I can take credit for this, but I think 2, 3 years back when I started talking about hospitals, all these hospitals were very reasonably priced across the board, and there were no major sort of talk about hospitals in social media or at a retail level. Institutions, I think, were still buying hospital stocks, but at a retail or at a social media level, I had not seen much talk about healthcare delivery companies, be it hospitals or diagnostics. Um, but today, they have run up significantly. All of them are trading at almost peak valuations. Majority of them, again, you can't generalize any statement, but majority of them are trading at all-time high valuations. So while the growth will be secular and while there is enough opportunity for these business models to grow, I think at current valuations, one needs to be very selective in hospitals. I think majority of these hospital stocks are overpriced today in terms of valuations, and any disappointment in terms of margins or growth, if it comes, I don't know when it will come, I don't know why it will come, but it can happen. You can always have a couple of bad quarters. It's a business. An Excel sheet is different. A business is different. In an Excel sheet, you can extrapolate 10, 12% revenue growth for eternity. Businesses don't work that way. So there will be, a couple of very good years, couple of bad quarters, that can always happen. So my sense is, given where valuations are today for hospitals, if there were to be a couple of bad quarters at any point in time, investors can lose some money. Um, so you need to be selective today if you're buying hospitals, and there are certain hospitals available at still very good valuations, very good business models available at very good valuations. So if you're buying those, I think it'll still be okay. But if you're buying the others, there is scope for downside in case they disappoint. If they don't disappoint, maybe you don't lose money, but you may not make much also because your current valuation is already discounting a bit of the future growth. But you may not lose money. But if they disappoint in terms of quarterly results, you will definitely lose money because the valuations are peakish today in terms of their historical range versus what they're doing today. So yeah, in terms of hospitals, I'll be really selective to this.
And sir, in the last quarter, we have seen a great spurt in institutional interest in the diagnostic space. So, any few points on that if you want to say?
So look, diagnostics again. I think Prince, we had done multiple spaces over the last 2 years. Again, when post-COVID diagnostic stocks were falling, I was very vocal about diagnostics. I was trying to sort of tell people that our analysis suggests that ex-COVID businesses are growing, and that is a trend that has continued over the past year or so also. So I think even in diagnostic space, the base business ex-COVID continues to grow. The stocks valuations have come off significantly versus what they were, let's say, 2, 3, 4 years back. They are now, I think, at or below, depending on stock to stock, at or below the pre-COVID valuations. So I think, and I'm talking valuation ratios, not absolute stock prices. So clearly, diagnostics today is a good hunting ground if you want to buy value stocks or stocks at a reasonable price, reasonable value. I think diagnostics is a good hunting ground, and I don't see any challenges in terms of growth or profitability in the business.
Right, sir. So, Babalal, sir, any question on your side?
Give me 2 minutes. Can you take some other question? I come back in 2 minutes, please.
Sure. So, Kaushik and Ravikant,
Uh, Sir, thanks for the opportunity, Prince. Sir, I wanted to understand there are a lot of companies who are coming with continuation process on their production, like pharma as well as chemical companies. Do you have any contra play on this, or like can I take any bet which can take this as an one of the themes in future?
Yeah. So that's a slightly technical question. Let me sort of tell you what I understand on the technical part of it, and then we'll come to whether there is a play on it. So normally production in India in pharmaceutical is done on campaign basis. Campaign is basically a top batch wise production, and the problem with that production technique is that a multi-purpose plant, once it has produced a certain number of batches for a given product, and now it
Um,
has to produce a certain another
Prince,
product. uh, Sorry, hello, am I audible?
yeah, Aditya, sir, well, you can continue, please.
Okay. So on a campaign basis, if they are producing certain product and then they have to switch over to another product, uh, there is a changeover time involved, and the plant basically stays idle during the changeover time. Equipment cleaning happens, etc., happens, and that sort of downtime hurts the cost metrics of the production. Um, a continuous production is where such changeover times are not involved. It's a technique where the plant can basically operate 24 hours a day without any changeover times and any idle time, and that therefore reduces cost and increases efficiency in terms of the output of the plant. Um, so that's what I understand of the campaign versus continuous production. Now, there are many pharma companies in India working on continuous production. None of them, in my understanding, none of them have been able to do it across their facilities, but all of them are experimenting with a couple of lines, which are continuous production lines, or a couple of plants which are completely based on continuous production techniques. So continuous production can be extremely cost efficient, can be extremely innovative in terms of the ability to manufacture more number of products in a shorter span of time. Um, but the challenge there is, do you have enough of it? I think today where we are, continuous production seems to be a new tech which most of these companies are evaluating, not necessarily adopting. And I think it will get adopted. I think a couple of companies are ahead of others in terms of the ability to adopt to this, and they will have an advantage. I don't want to name those companies, but there are certain companies which are doing continuous production now in their plants for API or certain intermediates, and they are benefiting from that versus their competition because their cost is lower versus their competition, which is with the competition basically doing campaign-based production, and they are doing continuous production. So yes, if you are aware of any company which is doing a lot of continuous production, in their plants, just you can make an assumption that their cost compared to their most of their competitors will be lower. Now depends on what product they are producing and what market they are selling the product to. If the market is attractive, the pricing can be attractive, and their cost will be lower, then obviously the margins will be good and the stock will do well. So, you need to pay attention to that side of the economics as well. Just because they're doing continuous production doesn't mean you go and buy the stock. You need to understand the other side of the economics also. What is the product that is being made? What is the competitive landscape of the product? What kind of pricing can they get? And therefore, can they, do better than their competition in terms of volume growth and margins? That is something you'll have to figure out.
Yeah,
Sir, I
Kaushik.
would just need a continuation on this one. If we see like there are a lot of pharma companies and chemical companies are doing capex. So there can be
Yeah,
a company where like who are producing the vessels or like glass lines or like piping systems. How about this manufacturing team that can take benefit of this chemical companies going into continuation process or like the batch process and their capex is increasing? So what do you think about this? Even PLI is supporting for a lot of these companies, right? Any play on this side?
yeah. So PLI again, PLI aside, we'll keep it aside because PLI may, while there is supposed to be benefits, at least I don't hear from many companies that they're getting the PLI reimbursements from the government. Here and there, thoda bahut paisa aaya hai, but not the kind of sums that were promised under the PLI scheme. Most of them have not been receiving it. So I think वो थोड़ा सा वहाँ पे execution का challenge है. Not to say कि government नहीं देगी, eventually तो देगी, but ठीक है, वो देखते हैं. That's a PLI को थोड़ा side रखते हैं. But yeah, capex. There's a lot of capex in chemical and API and intermediate, and some of this capex can be on campaign based. Some of it will be based on continuous production. So again, आपके पास अगर कोई stock है या कोई if you are studying any company which is doing a lot of capex on continuous production, so then that is a good stock to study. I'm not saying it's a good stock to buy. It's a good stock to study. Study क्या करना है? एक तो campaign based production से continuous production पे जाने से कितना cost बचा रहे हैं वो लोग, वो समझना है. That's point one. Point two, उनके competitors के मुकाबले कितना उनका cost कम होगा, and therefore जो product है वो जिस market में बेचेंगे, how much will be the realization and how much will be the margin therefore. ये पूरा समझेंगे उसके बाद ही शायद स्टॉक पे कॉल लेना ठीक रहेगा, बिकॉज अदर देन दैट यू आर वर्किंग विद इनकम्प्लीट इन्फॉर्मेशन. तो हो सकता है कंटिन्यूस प्रोडक्शन हो सकता है कॉस्ट कम हो, लेकिन वो जो प्रोडक्ट है और जिस मार्केट में बेच रहे हैं वो इतना फियर्सली कम्पिटिटिव है कि प्राइसिंग फिर भी नहीं मिलेगी अच्छी आपको. सो देन तो कंटिन्यूस और नॉन कंटिन्यूस फर्क नहीं पड़ता, आपका एनीवेज मार्जिन नहीं बनेगा बिकॉज एंड मार्केट प्लेस में प्राइस अच्छी नहीं है. सो वो साइड ऑफ इक्वेशन मत भूलिएगा. दैट्स व्हाट आई एम ट्राइंग टू हाईलाइट.
Right, sir. So, Ravikant, is the audio fine on your part now?
Yes, am I audible?
Yes,
Yes,
yes.
you are.
Go ahead, please.
Aditya sir, spectrum of the entire healthcare sector, if you look at, is like old age care, and that
Hmm.
sector hasn't been much discussed or looked upon as as an investment prospect, via an
Right,
investment perspective. So, can you throw
right.
some light, and if possible, detail upon like what key parameters we need to look into?
Yeah, sure, sure. नहीं, see, old age homes या old age care in India is a very, very fast growing market, extremely fast growing, and that is being driven by the adoption of the Western culture by the Indian society. Uh, पहले कैसा होता था कि kids will stay with parents and parents का old age का ख्याल बच्चे ही रखेंगे, more specifically बहू रखेगी या बेटी रखेगी. Parents का ख्याल भाई the मर्द in the household goes out to earn the bread for the house. अब वो क्या है, वो इकोसिस्टम अब थोड़ा चेंज हो रहा है. द बहू ऑल्सो
Mm.
वर्क्स और बेटी ऑल्सो वर्क्स, एंड ये जो न्यूक्लियर फैमिलीज हो गई हैं, they don't necessarily want to live with the parents. Sometimes nowadays I hear in marriages the precondition is that will not live with the parents. उसके बाद ही वो मैरिज कंज्यूमेट होती
Correct,
है, अगर
correct,
भी तो होती नहीं
correct.
है.
Yes, sir.
So उस हालत में होता क्या है कि when the parents go to the old age, they don't have the kids with them to take care of them, and then you need a structure, because in the absence of, when the kids are living with the parents, the kids provide the structure. But when the kids are not living with the parents, then you need a external party to provide the structure to take care of the aging parents, because with age comes diseases, disabilities, challenges, health challenges. So old age care ka potential growth in India can be phenomenal. driven by this trend and the acceleration of this trend. At least urban India, mein, I still know and believe that semi-urban and rural India still that traditional values are there, where the kids want to live with the parents. But urban India, mein, it is very very fast changing. At least from what I can observe with my ecosystem. Um, so there is a huge market out there. The challenge is how do you tap this market? Your business model to tap the market. Okay.
Yes,
Uh,
sir.
so for instance, there's this one stock that we have earlier discussed. Again, no buy sell recommendation. Max India, right? Just as a case study. So their first launch was this old age home project in Dehradun, right? Where they did certain things and they realized that they have not done it right, and they had to take a write off on that project because they launched a old age home luxury project, sauna, spa, golf course, yoga center, सब कुछ था. But the sales were not commensurate enough to make up for the cost that they had taken for the project, and therefore they had to take a write-off on that project. Then they launched the other project in Noida. Now the Noida project has done significantly better. They had learned from their mistakes in Doon, and Noida is creating good value for them. And then they did one. Now they are doing one in Gurugram where it's a joint project where in one wing parents will live, in the other wing there is flats for the kids also. So
Okay.
even though they're not living together, they're in the same society. So so they are experimenting, as you can see. इनको भी नहीं पता what will work. So they are experimenting, and so I think, and they will figure out. See, every society they can try to copy paste the US business model here, but the US ecosystem, the US values are different. So what would have worked there did not necessarily work here in India, and what will work in India may not necessarily work in US. So I think it's a business where the growth prospects are phenomenal. Competition is very limited. There are very few people who are doing this business today, especially because of the taboo related to the business. उसको वृद्धाश्रम बोलते हैं ना. It's not looked at as a old age home as a therapy ही नहीं देखते इसको old age homes को. They are looking at it as a वृद्धाश्रम that they have been disowned by their kids. वो एक social taboo है इसमें. So that social taboo is making many startups or making many entrepreneurs think twice whether they should jump into this business, whether there is adaptability of the business. But I think मैक्स इंडिया के प्रोजेक्ट्स और फाइनेंशियल्स देख के ऐसा लगता है कि देयर इज एक्सेप्टेबिलिटी, एविडेंस तो है. बट हाँ, विच स्ट्रक्चर विल वर्क बेस्ट, आई थिंक इवन मैक्स इंडिया इज इन द प्रोसेस ऑफ फिगरिंग आउट. So I think it's a business with a long runway for growth. Companies which are doing this business should do phenomenally well for the next 10, 20, 30 years even. And yeah, we will see what works best for our society. But it will take time to figure out what works best because ये एक project execute करने में 3, 4, 5 साल जाता है. So it's not something we can execute tomorrow if we decide it today.
Correct, sir. Correct. So, just one follow up on the same, sir. Like, I tried scratching this sector. So, like, apart from Max India, just like for knowledge sake, can you mention other players who are engaged in this particular domain?
Listed में तो I think Max India ही है. As far as my knowledge goes, I may be wrong. So there are so many companies now getting listed on the SME board also. पता नहीं चलता कब क्या list हो जाता है. But on the main board, I think Max India is the only company I know on this side. On the unlisted side, there is this company called Portia, Portea, Portia. Portia is a conglomerate. They do old age. They do other stuff also, but they do old age also.
Okay,
So
okay, sir.
Portia देख सकते हैं. और in fact, you can go to Max India का investor presentation आता है every quarter, and I think in that investor presentation they mention their competitors. So
Okay.
so in that presentation you can find a few names. All of those names, I think the only listed one I could find is Max. Every other guy is unlisted.
Okay, okay, sir. Okay. Yes, sir. That's fine. I will join back the queue and get back to you.
Thanks, sir.
Thank you.
Yeah, Babulal sir.
Yeah, good evening to all. Mr. Aditya, I am Babulal Jain. I come from
Hi,
chemical
Babulal.
industry. So when you say of
Awesome.
continuous plant and all that, many processes are being followed on continuous basis. The
Yeah.
advantage or the real uh, reason to go for it, one is safety. So nitration is shifting to continuous plant. Yeah, nitration is one process, bromination is another process, and there are other processes where the batch process gives lot of impurity and lower yields. I come from Pune. I
Right.
visit NCL regularly, and
Awesome.
so some product, for example, will give 65% yield and 2 or 3% impurities, which are very difficult to eradicate completely. But
Right.
when you go continuous or when you innovate your
Mm.
process, either in batch or
Mm.
otherwise, the yields have gone up to
Mm-hmm.
95% and impurity to negligible level.
Right.
Only difference between India and China is, in China, the government institute have converted 1300 uh, processes. Out of 1300 processes being followed, 800 processes they have made it in flow, not certainly in this, not necessarily for API, but general process industry, including specialty and other
Uh-huh.
things. And
Mm-hmm.
government has given the money on their own. I know the companies, I know the products, because we are doing business
Mm.
regularly with this.
Right.
So
Right.
in India, unfortunately, NCL is not doing that kind of work what is required to be done. Neither there is a
Correct.
initiative from industry or industry and this academia collaboration. I did attend one meeting about 5 years back before pandemic.
Ah.
So most of the directors, including Director General CSR, was present. So after everybody spoke,
Mm.
I spoke. China is doing this. How much we are doing of this stuff? So Director NCL told only one thing: we are not doing even 0.1%. The problem here is
Hmm.
our government is not proactive to provide import data to the industry. This is being
Mm.
imported, and this is what can be made, and this data is not available to anybody, neither to the deserving industry.
Mm.
That's a big difference, and
Mm.
because of that, we are still depending on China. But well, people are learning from the mistake. They have their own R&Ds, and many companies are trying to do continuous process. One of them is ether industry, of course. No buy sale again.
Yep.
Ether industries have done
Yep.
excellent job because
Yes.
the promoters have experience from US.
Yes. Yes. I'm aware.
Yeah.
Yes, sir.
So these kind of things are happening. People are trying even complex reaction like Grignard reaction in continuous mode, which can be very, very beneficial. The advantages are you are
Yeah.
not having peroxide formation, danger of fire, and so many things. First of all,
True.
1600
Yeah.
liter reactor has been converted to 2-liter reactor for same production. So
Yep.
utility cost goes down drastically. The water requirement goes
It does.
down. It is adoption speed
Yeah.
is at nascent stage. It should pick up, and
Mm.
I really now I am out of API industry, and we do not
Mm-hmm.
wish to go back to API. I was making API from
Mm-hmm.
81 onwards. I was exporting also API.
Oh, wow. Oh, God. Mm.
Yeah, I am the person who made metoprolol tartrate first time in India way back in 86. I
Acha.
was supplier
Wow.
to
Awesome.
Torrent, I was supplier to Glenmark for clotrimazole, I was supplier to Glenfarm for mefenicine and all that. So I know in depth. See, this adoption has to become faster, and companies are trying.
Yeah.
The big advantage now coming is fluorochemistry is coming to India because of
Mm-hmm.
Gujarat Fluoro, because of Deepak Nitrite, Aarti Industries. Again, these
Yeah.
names I'm specifically telling because they have announced
Mm-hmm.
their projects in fluorochemistry.
Yeah.
5 years back, we were totally dependent on China for importing most of the fluoro intermediate which goes in to new age drugs.
Yeah.
So that change is happening. Unfortunately, government intervention or support other than PLI is not seen. And of course, you and me know very well that environmental laws are not in sync with environment or with the industry requirement.
Mm.
Yeah,
Right,
that is
right.
what I will put here. And as
Mm.
regarding high cost of Indian API industries, because we are missing the middle
Mm.
chemistry, right? Let's say I'll just give one or two example. We have chlorine
Mm.
availability free. We are making toluene, but we are
Mm.
importing completely parachlorotoluene and all 30 derivatives depending on parachlorotoluene. That increases
Yep.
our cost, and this
Mm.
in backward integration or forward integration by petrochemical industry is not seen.
Yep.
Yeah, that's all is in that is the reason we are not very competitive. The whatever is compensated by our manpower cost, and
Mm.
some people have gone to the scale.
Correct. No, Jagannath ji, first of all, I would like to thank you for sharing your experience. You're a man from the industry, and for everybody on the call, this is the difference. When a fund manager slash analyst like me talk, I talk कि भाई cost कम हो जाता है. When somebody like Jagannath ji talks, he says कि भाई yield बढ़ते हैं, इसलिए cost कम होता है. समझो इस चीज को. So and obviously accidents कम होते हैं, वो भी cost का ही part है. The more accidents you have, the higher the cost. So thank you, Jagannath ji, for adding to our understanding.
Anyway,
And I agree
Babulal
with
Jain.
you. Uh, Babulal ji, sorry. So thank you so much, Babulal ji, for your inputs. And what is more important here is that, as you said, there are certain companies which are, progressing on this path. You took a few names. मैं hesitate करता हूँ because मुझे ये नहीं पता कि उनकी जो total capacity है, उसमें से कितनी ये लोग flow chemistry पे लेके जा रहे हैं. Because some of their older capacity is still campaign or batch based. Their incremental capex is happening on flow based. Now वो flow based में therefore तो total capacity अगर 1000 की 10,000 हो रही है, तो how much therefore will remain on flow and how much will remain on campaign basis, ये मुझे पता नहीं. I don't have the answer.
Oh, no, speed
Because
is
I don't
quite
have.
slow.
हाँ,
Most of the people dependent on
correct,
Cambridge technology, they imported small reactors worth 1.5
exactly.
crore rupees, silicon carbide reactors
हाँ,
and
हाँ,
all
हाँ,
that.
हाँ,
But our equipment
exactly.
as is doing very good job. They are unlisted company. They are
Yeah,
providing
yeah,
experimental lab at Ghatkopar and they are providing reactors.
yeah. Right,
And many such initiatives need to come. One
correct.
has come up in
So,
Bangalore. I think it is
hmm,
Avista Laboratory or something like Avis. I have name on the phone number.
okay,
I am supposed to visit them,
okay.
but this
Okay.
change need to be done faster. Now you ask for some
Yeah,
specific product.
absolutely.
This metformin is being made continuously, 600 tons or some capacity per annum or per month. I think per annum, per month.
Hmm,
Of course, it is done by Aarti in
hmm,
their Vapi plant. Vapi or Ankleshwar plant, I don't
right.
remember. The
Hmm.
simpler products are being
Yeah, right.
taken up, but
Yeah,
uh, big change is still required, and I think pharma industry should embrace to this technology by putting lot much R&D efforts rather than capex. Capex in flow chemistry is quite small.
exactly, exactly. That's the problem. Agreed, Babulal ji. Thank you so much for your inputs.
So Fazal sir is also there. So Aditya sir, he
Sajal bhai, Pranam.
sir would be asking questions only, sir.
Hi, Aditya.
Hi, sir.
Yeah, hi, Aditya bhai. Pranam to you as well. I just joined because whenever you are talking, I'm all ears. So I've purely joined as a participant.
ना
I
ना
have
ना ये बोल के आप कट नहीं सकते बॉस.
no, no,
We
no.
have to take a few questions.
I have few questions, but I'm kind of last one in the priority queue. So let's not waste any time and let the Q&A continue. Thank you.
ठीक है, ठीक.
Thank you, sir.
Thank you.
So the Martin, you go next, and then Gaurav, and then we go to Sajal sir. Yeah, quickly, the Martin.
Yeah, hi sir, good evening. Firstly, I'd like to thank you for all the knowledge that you impart. Truly grateful, God bless, because wholeheartedly you impart the knowledge without expecting anything in return. So really appreciate that. So I just wanted to
Absolutely.
get yes, I just wanted to get some inputs on these smaller pharma companies, for example, who have developed IP. So there is this one company you must be well aware. So they have developed this antibiotic, which and they have licensed it to a American company, if I'm not mistaken, to sell it in that geography. So I just wanted to understand your views on such a company because while we know that researching is a very hit and miss opportunity, but this
Yeah,
company has already hit it, and currently they have exited that module, and they're not researching as much into new entities. So I think that the cash flow drain may have stopped because of the change in management. So that is the first thing I would just want your views on. And the second thing would be how we say, yes, sir, if you can just complete that, and then I'll ask you the second question.
okay, sure. So look, as you said, I have always maintained that innovation is a hit and miss game. I understand that they have outlicensed one product. Let me take a name and let me take an example. Glenmark, Pharma, right? So Glenmark outlicensed, I think, its first molecule in 2003 or 2004. and then it subsequently outlicensed a lot many molecules right up to 2010, and then all those outlicensed molecules failed. So just because you have been able to outlicense it, what it just means is that you get some lump sum payment upfront and a promise of royalties or milestone payments in future if the molecule further progresses on the development and commercial path, right? The big question is, does the molecule progress or does it just die down after you have outlicensed it, right? And to take a call on that is again that hit and miss game, correct? So if the stock you're talking about or the company you're talking about is if it has outlicensed just one molecule, uh, you can basically take a 95% chance that that molecule will not survive. If they have outlicensed like 20 molecules, you can probably say with a 90% probability that one molecule will make it to the market. 90-95% probability you can take that out of the 20, one will make it to the market. Because see, वो outlicense किस stage पे हो रहा है, right? So there is preclinical, phase 1, phase 2, phase 3, right? Now, mostly outlicensing happens between phase 1 and phase 2. Because phase 3 is a very expensive affair for a novel molecule. And most of these Indian companies do not have the balance sheet, barring maybe a Sun Pharma, Cipla, etc. They don't have a balance sheet to run a phase 3 of an innovative product on their balance sheet, right? So they have to outlicense it compulsorily. If there is a buyer for it. If there is no buyer for it, even if they wanted to outlicense it, they can't outlicense it. But if there is a buyer, they would like to outlicense it. So that is the game here. So I can understand why stocks or businesses get excited once there has been one out licensing, especially if the guy who has in licensed it from them is a Pfizer or a Lilly or a Novartis or a Glaxo. Then there is some excitement in the investment community. But understand that if you go to Pfizer or Novartis or Lilly or Glaxo's annual report, they in license 100 to 100 such molecules, right? And they also know that because they've in-licensed about 100 molecules, maybe 5 or 6 or 2 of them will see the light of the day in terms of commercial revenues. So they also follow what is called a portfolio approach. They develop 100 molecules, they in-license 100 molecules, develop them, and they finally end up launching 2 to 5 of them in the market. Now, if your company's molecule is within those 2 to 5, you have hit the jackpot. But if it is not, then that initial milestone payment, what you got is what you got. And the company that you're talking about, which has outlicensed it, एक outlicense करके उसका R&D expense बंद नहीं होगा. It will continue to develop more molecules. So that R&D expense, ये illusion होता है कि एक भेज दिया अभी बाहर outlicense कर दिया तो R&D expense कम हो जाएगा. वो कम नहीं होता है, वो बढ़ जाता है. Because that money that you get for that outlicensing, and further it actually gives the entrepreneur more confidence that I can do more of this because there is acceptability of my work. So he increases the product basket which he's offering. And तो ग्लेनमार्क ने यही देखा, वोकार्ट ने यही देखा, इसमें स्पार्क ने यही देखा, हर जगह यही देखा है कि जैसी आउट लाइसेंसिंग होती है उसके बाद एक्चुअली R&D एक्सपेंस बढ़ना शुरू हो जाता है because they increase the number of products they're working on, because that confidence comes into them that we can do and there is acceptability of our work. But for an from a business standpoint, that is great. So how the entrepreneur is thinking, how the scientist is working, how the science is, from all that perspective, it's great. From an investor standpoint, that equations are completely different. We are not bothered about all this. हमको पैसा बनाना है. So पैसा बनाने के लिए क्या important है कि वो 5 मॉलिक्यूल आउट लाइसेंस करे, 10 करे, 20 करे, उसमें से कम 1 या 2 मार्केट में कमर्शियलाइज हो. One or two of them should get into the commercialization stage, and if they get to the commercialization stage, that is when really the company or the stock starts making money. Look at what happened to Sun Pharma after Illumia went commercial, right? That is just the only example I have because no other company in India really has commercialized any novel molecule, say. So that is important. So when that happens, that is when you make money. Otherwise वो बीच में स्टॉक में स्पॉट आएगा, फिर वो R&D एक्सपेंस बढ़ेगा, फिर वो स्टॉक गिर जाएगा. It's a cyclical game then you have to be aware of your entry and exits. Does that answer your question?
Yes, to an extent. So just for further clarity, I'm sorry I shouldn't mention the name, but just for learning purpose, it's Orchid that I was talking about, and I believe since the management has changed, they won't be researching into more novel molecules as such. That was my understanding. I'm sorry if I'm mistaken.
No, which was the company you mentioned? Sorry, I couldn't catch the name.
Orchid Pharma.
Okay,
Orchid Pharma.
Orchid. I got
Yeah.
it. Okay. So look, Orchid again. So let it be Orchid or beat anyone else. If they're outlicensed one and they're not doing any more work on it, that tells you two things. Number one, the fact that they've outlicensed it, it seems like they have gotten rid of a vertical which they didn't want to keep, right? Correct. Otherwise, after outlicensing, you should have more confidence on doing more work now. Why would you stop it? So management change hai, philosophy may change hai, that is correct. So now if I am valuing, let's say, a company like Orchid in my Excel sheet or in my head, what I will do is I will take their base business, give it a certain multiple, value that. This molecule that they have out licensed, I will try to find the NPV of the molecule. Let's say the molecule is an antibiotic, as you said. Let's say it's a superbug antibiotic. Now, if it's a superbug antibiotic, if the molecule goes commercial, let's say the potential revenue is $2 billion. एंड $2 बिलियन का पीक रेवेन्यू है तो एनपीवी रफली $3 बिलियन के आसपास आएगा जनरली 1 to 2 times पीक रेवेन्यू सो आई एम टेकिंग 1.5 times सो लेट्स से $3 बिलियन का एनपीवी आएगा मॉलिक्यूल का नाउ लेट्स से $3 बिलियन मॉलिक्यूल एनपीवी इज एट द एंड ऑफ द सेलर ये तो आउट लाइसेंस करके बैठा है तो इसके लिए उसका लगभग 10% आता है रॉयल्टी प्लस माइलस्टोन पुट टुगेदर इज ब्रॉडली 10% ऑफ एनपीवी so 10% of NPV is $3 billion ka $300 million. Now $300 million is your net NPV for Orchid. Now this needs to be probability weighted. Now the chances of this antibiotic making commercial, given that it has outlicensed only one product, maybe 5%. Best case 5%. Depending on what stage it is, I am assuming it is in phase one. Correct me if I'm wrong. If it is in phase one, then 5. If it is in phase two, then 20%. Phase three, then 50%. So you apply the percentage on whichever the stage this molecule is. So if it is let's say phase one, then 5% of $300 million is $15 million. So the probability weighted NPV for this molecule for Orchid is $15 million. If it is in phase one, phase two then 60, phase three then $150 million. So वो करके आप देख लो. That is your Orchid का intrinsic valuation में उतना value बढ़ जाएगा.
Understood, sir. Thank you.
Thanks, Martin. So, Gaurav, you can ask next.
Yeah. Thank you, Aditya sir, and thank you, Sujan sir. Thanks for sharing your insights. Sir, my question is regarding we are seeing a lot of players coming in CDMO business. I mean, Murugappa Group. Recently, there was Keel from Nirma Group, CDMO and Glenmark Life Sciences both. So, first of all, I just want to understand that when most of the companies talk about CDMO, do they carry do they have CDMO capability basis certain specialties? And if no, I mean, is it like a common once you get you can reach out to a lot of different customers and then you help them develop the thing. So in future, can there be a scenario where we can see because many people are now building a lot of capacity. So in future, can we have a excess supply problem and then pricing drop just like we saw with the formulation business also? So two part of the questions. So are
Sure.
they capacities basis specialties and then can there be a future scenario like this? Thanks.
सजल भाई ये तो आपको ही लेना पड़ेगा सीडीएमओ तो भाई आपसे अच्छा तो नहीं बोल पाऊंगा
नहीं ऐसा नहीं है आदित्य भाई आप वी वुड लव टू हियर योर व्यूज बट maybe I can start with whatever I can incrementally add. So I have got nothing new to share. Maybe I can start with a very famous movie called 50 Shades of Grey. काफी लोगों ने देखी होगी और हो सकता है एंजॉय भी की हो. तो just like that movie na 50 Shades, in CDMO also there are 50 shades. And to never go by the headline that business XYZ is in CDMO, it doesn't tell us anything, literally nothing, because the, it's an abused word. If I'm completely honest, you need to open the bonnet of that car, check the wiring, and pretty much invest a lot of time going through their filings, the data management interaction, to be able to figure out the driver of the cash from that CDMO business. See, if you pick any business, the multiple on the valuation that you're paying for that business is not the EPS or what has happened in the past. You are betting on that business for the future cash flows that are still not visible. It's like that iceberg, na, where very small portion is visible and majority of that iceberg is below the water and it's not visible. Exactly the case with not just CDMO, with any business. So what do? You look to validate the drivers of the future cash flow, because it's the future that you are betting on today. And in order to identify those drivers and be able to value that, what is the likely cash flow, let's say 4 years out, and how the market is discounting those cash flows in the current valuation. And if there is a significant delta or gap or misunderstanding between what your understanding is of that cash flow, which is still not visible, it's hidden, it's unknown, but it will come after say 4 years, and market has got zero clue and it's not valuing the business appropriately, then maybe there is a hypothesis that you should take an exposure or increase exposure in such a business. So there will be many companies that will be joining the CDMO bandwagon. There are already some very good companies in the unlisted space that are doing decent work. May or may not be great work, but they are doing decent work, and majority of them are backed by private equity. So at some point in time, it's natural to expect that they would be hitting the market, because that private equity partner would be looking for an exit. So not necessarily the existing landscape is the, I'm just purely talking about India. Not necessarily the existing companies in the listed space are the only option as far as your universe of investment should be considered, because there will be many other companies. Because I have got no doubt in or very high conviction that this is a space which will be viable for a foreseeable future. And I'm talking about decades here, not years of obviously. So there will be many high quality businesses that will be hitting the market, and you will get plenty of opportunities to invest. The my definition of CDMO is um, having a capability which is either a monopoly or a duopoly. So by definition, there will not be competition at a molecule level between the partner and the innovator. And the other definition is that the capability of the company should be such that they can take a molecule right from the IND filing, which is the investigational new drug, which is exactly when the regulator like US FDA is giving the approval that you can start hitting the human clinical trials or phase 1. So if a company could participate in that IND filing and help the innovator secure the go ahead or the green light from the regulator to hit phase 1, and then start working on that molecule from phase 1, and then scale it up through all the filings and the submissions, and take it all the way to commercial. That kind of capability very few companies in India have got. And I'm including both listed and unlisted space. So we have to be very careful in terms of evaluating what is a high quality CDMO, because high quality CDMO is that kind of a company that can take a molecule at a very early stage and partner the innovator and take it all the way into commercial. That kind of a company will have the potential to snowball the cash flow, because they have the drivers of the cash flows there. The EPS or the current cash flow will not be a true indicator of the future profitability in these kind of businesses. And that's exactly what I look for, because the market will not be valuing them the way they ought to be valued. And you get a pretty decent window of opportunity to accumulate them, if that makes sense. The other spectrum of CDMO is the generic aspect of CDMO, where when a molecule is off patent, The innovator often continues with the marketing and the commercialization of that off-patent molecule, but because of the pricing pressure that invariably sets in, because a lot many number of competitors join once the molecule is off patent, and the innovator invariably looks for a cheaper manufacturing process and or a cheaper manufacturing destination. And in lot many cases, so Glenmark Life as an example, again not a recommendation, and they are into the CDMO of life cycle extension, and their blended margins are close to 30% at an operating level, and they say that the generic CDMO component in the mix is giving them a better margin. So it could be 35% or it could be more, we don't know. Divi's Labs is another example where um, before that COVID disruption happened, they were reporting a blended operating margin of close to 40%. And that includes their generic molecules, their generic CDMO, as well as some patented CDMO. So even generic CDMO is not a bad business if we purely look at from a operating profit kind of perspective. And the reason is that even if the molecule is off patent, because the technology is specific for that relationship between the manufacturing partner and the innovator, um, there is not necessarily as high a pricing pressure as you would find in an unbranded generic like a paracetamol. I'm not sure if I've answered both parts of your questions, but I'm happy to clarify if there is any doubt.
Uh, thanks, Sajal sir, for this information. One doubt remains, and this is just an example, like company A, company B. Most of the companies may not share the end customer they may be working with in the CDMO domain because of, NDA or any those kind of reasons. And how do you assess that the capabilities are similar? I mean, like they may have equal capability in that, because the concern remains that most of the people are expanding their capacities, and they are awaiting that once the growth comes, maybe because of operating leverage, they may uh, gain valuations and see a very good turnaround in the revenues. But suppose the growth comes back, will they be seeing a fight on the pricing? I know you answered some bit of that, but only doubt remains that. I mean, if you can help
No,
on that.
that's a perfectly valid question. That if 10 companies are expanding capacity, then you need to ask either on the most companies are doing earnings post earnings conference calls, so you should jump on one of them and try and ask a question. Most participants would have already asked these questions in previous transcripts, so you should be able to find it. The key validation is, if you are expanding capacity, is the innovator participating in either by signing a long term contract or giving you some sort of advance payment, or joining you in sharing a part of that capacity. So maybe you are setting up a 100 kl capacity with 40 kl dedicated for that innovator, and then the other 60 kl you are free to sell to other customers. What is the driver of the capex in terms of the project cash flow investments being shared, and how they are shared between the innovator and the partner who is expanding the capacity? That should tell you whether this expansion is happening on the back of some sort of a commitment from the innovator, or it's happening willy-nilly.
Thank you. Thanks a lot, sir. Thanks for sharing
Sure,
your insights.
sure. Aditya, over to you.
Yeah, I think just one I will add here on the CDMO part. When you said now there are so many groups jumping into the bandwagon, I think yeah, ये capacity का game नहीं है, ये skill का game है. CDMO, yes, कहीं capacity का भी role आएगा in certain products, like as Sujal bhai said, वो generics का जो CDMO capacity होता है, in that capacity will also have some role to play. But given where we are today, over capacity के बारे में सोचना I think is a bit too early. I mean, we're talking 10, 20, 30 years here early. So is overcapacity possible? Certainly, yes, at some point in time. Is that point in the foreseeable future in terms of next 10, 20 years? Probably not.
Yeah, and
Thank you.
part of that capacity will also shift globally. See, um, there are certain leading European CDMOs that have started giving profit warnings, and they have also started sharing that some of their projects are getting cancelled. There are only two reasons why an innovator would cancel the CDMO project. One reason, which is the most common reason, is that the molecule is dead. It could be in phase 1 से phase 2 में नहीं गया, या phase 2 से phase 3 में नहीं गया, या maybe right at the cusp of commercialization and US FDA declined the application. So it's a natural death of that molecule, and the molecule dies. It dies. The project is cancelled. That's one. The other reason could be that some of that demand potentially shifting from Europe and Western economies to Asian economies because of cost arbitrage, or maybe the skill gap, because it's not easy to find 200, 300, 400, 500 scientists at a certain price point. See, it's not just about skill. At what price you are getting those skills. So if you take US as an example, the amount of money that the innovator was spending on that skill pre-COVID is much higher today, because the people got displaced, relocated, they were fired, and then hiring is becoming increasingly difficult. And if you want to hire a scientist or a certain number of scientists, you got to pay them much more than what you were paying them inflation adjusted pre-COVID. So in a matter of 3 years, the labor market has dramatically shifted in Western economies. So that is another reason why some of these projects are getting cancelled, because it's not viable anymore, or the innovator is not willing to work with that kind of a margin, and they're looking for a better economic model. I cancel the contract with the Western innovator, not innovator, the cancel the contract with the Western CDMO and give it to an Asian company, because you get the same quality of skill, same skill set, and you end up paying a lower amount of price for that, which kind of, so imagine a small biotech, they've got a limited funding, they want to increase the runway of that funding, right? So they want to reduce. How do you increase the runway? Either you inject more cash into your balance sheet, or you reduce the burn rate, which is how much money you are spending on a monthly basis, net of your any earnings that you might be getting. So that is another reason why a lot of these European and American CDMOs are giving profit warnings. So Catalent is not the only one. I mean, in recent times, I've seen many leading European CDMOs are reporting a cancellation of projects as well as profit warnings. Whereas I don't see any such weakness in the Indian landscape, at least. I'm not sure about what Chinese CDMOs are doing, because there is so much opaqueness. I mean, we don't know what data is there or not there. But I don't see, I don't expect the results. We are just at the cusp of the results season. Let's see what results, what kind of results and commentary comes out. But at least I'm not expecting any sort of bearish commentary from the Indian CDMO companies.
Thank you. Thank you. Thank you.
Thanks,
Sure.
Sajal sir. Thanks.
So, Sajal sir, your questions to Aditya. Sajal sir,
Yeah,
am I
am I?
audible?
Sorry, I was on mute.
Okay.
Am I the last one in the queue, because I don't want to jump ahead of anyone
No,
else.
no, sir. We are going by the queue.
Okay, right, sure. So I've got 3-4 questions, if I may. So first one is, Aditya, how should we value a business where the base business is set to change in the next, let's say, 4 years, and changed
Mhm.
dramatically, where a new cash flow source will be bigger than the existing cash flow? So if the operating profit that the business is generating today is X, then 3, 4, 5 years out, the new sources of cash flow will be bigger than X. If that is the kind of scenario
Growth.
emerging, how should we value such a business and in terms of the multiple? Because the current cash flow will be misleading in that sense, right?
Absolutely. No, so I'll give you an example again, and this is just again for just example purposes, right? So I'll give you two extreme examples. First example, let's say a company like a Krishna Diagnostics, and this is public information. Their own guidance is that while their FY23 revenue was 480 crores, their FY25 revenue can be north of 1,000 crores, right? That is their guidance. I'm not saying whether
Mhm.
they'll be able to achieve it or not, but yeah, इनका guidance है. So this is a classic example where the cash flow, which is the trailing cash flow of FY23, is not going to be much compared to what they will make when they do 1,000 crore plus of revenue just 2 years out, right? So how did I value that stock, right? So what I did was that given their guidance, you do the DCF, and beyond the period for which they have an explicit guidance, you take a certain CAGR of revenue, like 10, 12, 15%, whatever you feel comfortable with, and and then you do a DCF based on your free cash flow projections and your capex assumptions and your asset turnover assumptions, and your cost of capital assumption. So my cost of capital generally is 15%. If I'm investing in equity, I want 15% minimum. So I want 15% return. So 15% is generally the discount rate that I take, but you can take your own discount rate. And then you just do a DCF, and that DCF can give you, some absurd number. It can give you some very low number also. So, for instance, in Krishna, despite that sort of a dramatic, this thing growth, the intrinsic value that I get is like 150% upside from today, right? Let's say, again, I don't know whether that is the right number, but
Yeah, yeah, yeah.
let's say 150% up from today is what I get in my Excel sheet. Now, whether that Excel sheet will materialize or not, it will depend on how Krishna delivers versus my expectations, right? The other extreme example of this is, let's say, a company like Max India, which we were discussing, I think, right before you joined the call. So today, whatever they are making versus what they are guiding to, the public in their conference calls, if I build that out, the valuation sometimes comes out at 7, 8 times their current valuation. Now, is that correct or not? Again, will depend on whether they are able to deliver. So, सजल भाई, मेरे हिसाब से तो देखो, वैल्यूएशन टेक्निक किसी भी एसेट का एक ही है, DCF है. Now, when you do the DCF, you put the assumptions. क्या assumptions डालने होते हैं? Top line, margin, asset turnover से capex आता है, working capital, and then free cash flow, right? So free cash flow आ गया, उसके बाद you can make your own a free cash flow table, and you can put sensitivities. That if it is, I've assumed 10%, what if it turns out to be 12? I've assumed turnover of 2x, what if it turns out to be 3x or 1.5x? And so on and so forth. You can put your sensitivities around it. But any such asset you have to, so Excel sheet, I despise Excel sheets because businesses, unlike Excel sheets, don't grow at 10% CAGR, right? Some year it's 15, some year it's 5, overall it's 10. But in the absence of the ability to exactly say कि किस साल 15 और किस साल 5 और किस साल 25 ग्रो करेगा, let's take a reasonable assumption of 10-12% CAGR and then do the DCF and then figure out कि क्या valuation आता है, and फिर उससे derive होता है multiple. So while a fair value for let's say a Krishna Diagnostic might be 12-13 times EBITDA, the fair value, let's say, of a HCG type of hospital business can be 30-40 times EBITDA, right? And क्योंकि दोनों के growth metrics अलग है, दोनों का capex metric अलग है, दोनों का free cash flow profile अलग आता है, and therefore you have to go through this. There is no shortcuts here, basically. Otherwise, shortcut क्या है? Pharma है 20x दे दो, या हॉस्पिटल है 40x दे
हाँ,
दो.
हाँ, हाँ,
बट
हाँ.
बट उसमें प्रॉब्लम में फंस जाओगे, बिकॉज देन यू आर नॉट, सी वी कीप सेइंग दिस ना, मी एंड यू वी बोथ कीप सेइंग कि ये सेक्टर बहुत ही हेटेरोजेनियस है. इसमें ना कंपनीज आर नॉट like for like, even in the same sub segment. Even in a hospital, Apollo is not the same as a HCG, or a Narayana is not the same as a Max Healthcare, right? So हर एक स्टॉक का आपको DCF करना ही पड़ेगा. There is no shortcut. And DCF करके you derive your value and you stick, you believe your assumptions are reasonable, then that is the intrinsic value for you, and you should work with that number.
That's helpful. That's helpful. Thank you. A few more questions. How how will this, this WHO GMP compliance mandate,
Hmm.
um, how will this affect the regulatory environment in India? And then what it means for the cost structures of both the incumbents and the new entrants, once this WHO GMP is applied across all the manufacturing units. Because to my
Ah,
understanding, currently about 90 to 95% of Indian units, and they are in thousands, right? They are not
yeah.
compliant, so they need to upgrade into
Right.
WHO GMP at least, if not a higher GMP.
Hmm.
So how may this impact the margins and the cash flows of the industry, 3 years out? I mean, government
Correct.
wants them to be WHO GMP compliant in 1 year, or
Yeah.
11 months left in that, whatever. But the industry
Yeah.
is saying it would take minimum 3 years, and I think industry
Yeah.
is right in that sense, because it takes time to
Yes.
upgrade. So once you have upgraded, you have invested more money. Your economics have changed, because now your manufacturing expenses, you need a higher level of QA QC, so on and so forth. So आपकी cost भी तो बढ़ गई. So what does
Yeah.
it mean for the pricing structure in the market, both for incumbents and the new players? I mean, what's your sense?
So interesting है. Basically, look, listed, unlisted मिला के there are multiple CDMO, multiple CMOs. I'm not calling them CDMO because it's all generics.
हाँ.
So multiple CMOs have WHO GMP. The largest contract manufacturer for Indian pharma market is Akums, 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 Delhi-based
हाँ.
company.
हाँ.
हाँ.
हाँ. हाँ.
So जैन साहब का है. So I know Sanjeev Jain sir quite well. तो उनको they'll get more business because अभी तक क्या है कि because they were WHO GMP, their cost might be slightly higher for a tablet compared to, let's say, a non-WHO GMP compliant facility in Baddi of some local guy, and some pharma company might be buying from that local guy because of the cost differential between of that local guy and then a Coombs. But now with this regulation, this pharma company will be forced to buy from a Coombs and not go to the local guy because the local guy just cannot be WHO GMP compliant given the state of his facility, right? So there will be some marginal increase in cost. Also, a trend that we have seen, and I've seen this across pharma companies, they have started to expand. So अभी तक क्या हो रहा था? 10 to 40% of the production of their Indian products was in-house,
Hmm.
and 60 to 90% of the production of their Indian products was outsourced. So अभी incrementally I am seeing more production coming in house. एरिस ने किया, अजंता ने किया, इप्का कर रहा है. So all of them are saying कि यार मैं ही कर लेता हूँ, मतलब it's not a big deal. See, because branded generics में gross margins are so good and there is so much pricing ability, the minor fluctuations in cost will not even show up in the P&L. It doesn't show up in the P&L. So उससे होगा क्या कि there will be maybe some few basis points pressure initially, but वो आप प्राइस अगर बढ़ा सकते हो तो then that pressure gets nullified. What is more important is that you are assured that आपका product off the shelf नहीं जाए for a supply disruption situation. So you don't continue to buy from a guy in Baddi believing he's WHO GMP compliant, and when
Hmm.
some sarkari afsar goes to audit it, figures out it is not compliant and shuts down the plant, and then suddenly you don't have a product to sell. You don't want that. थोड़ा सा कॉस्ट अगर 5% हायर भी होगा तो चलेगा. सी सजल भाई, 75% के आसपास का ग्रॉस मार्जिन इंडियन बिजनेस में, विच मीन्स
Hmm.
₹100 का एमआरपी है, ₹100 का फार्मा कंपनी का रियलाइजेशन है, तो ₹25 का कॉस्ट है. फॉर अ 5% इंक्रीज इन कॉस्ट, दैट 25 goes to 26, right? That
Hmm.
75% gross margin goes to 74. It doesn't change the world for me,
हाँ.
right? So for that,
Correct.
but for a shortage of product, जहाँ पे if I'm not able to get the product only because मेरा supplier को सरकार ने बंद कर दिया, it was not WHO compliant, then there is a big impact because my revenue declines then, right?
Hmm.
So,
Hmm.
so I don't want that situation ever. So what will happen is maybe depending on company to company, and more importantly, depending on their ability to increase their prices of their brands, there might be some impact on margins. And I think impact on margins will be more on the smaller players than the larger players because larger players tend to have larger brands, which has
Hmm.
more power. So smaller players पे थोड़ा हो सकता है pricing pressure आए because of WHO compliance की तरफ push कर रही है सरकार. But eventually, most of these companies will take some of their larger brands in house. because they want consistent, no challenge supply in that product. And the smaller products they continue to outsource to guys like Akums and others, where these guys will manufacture the product. So that's how I see it. Some of the players who do manufacturing for these guys, like Akums, some of these players are listed also. Not Akums is not listed, but some of the smaller guys are listed. So for them, it probably means more business because they are WHO GMP compliant, and it's well known that they are WHO GMP compliant. So ये जो बद्दी चंडीगढ़ ये सब साइड में जो थोड़ा inferior quality manufacturing होती है, hopefully if this is properly implemented, see अपने गवर्नमेंट में चैलेंज इम्प्लीमेंटेशन का भी है. आपने रूल तो बना दिया, हाउ मच डू यू एनफोर्स एंड इम्प्लीमेंट. तो अगर ये लोग प्रॉपर्ली इन्फोर्स एंड इम्प्लीमेंट करेंगे, then these smaller guys will get some higher volumes from these pharma companies as orders because they are WHO compliant.
And also country की image भी ऐसी, on one hand you are calling yourself as the pharmacy of the world, and if majority of your units are not even WHO GMP level, then how come you are the pharmacies of the world? So there is a lot at stake, as well as far
There
as
is
the
a lot of
government is
stake.
concerned.
No, that is true, but उसमें एक twist भी है. So let's say there are 6,000. Last count, I think there are 6,000 facilities, right, which manufacture drugs in India, uh, if I remember correctly. But एक 6,000 number of units हैं, and let's say 6,000 units do 100% of production. The top 100 units will do 80% of production. You understand? ये 80-20 Pareto principle apply होगा. तो जो top 100 facilities हैं ना, वो सब WHO compliant है. So अगर आप ये बोलोगे कि how many of Indian facilities are WHO compliant, then only let's say 100 out of 6,000. But अगर आप ये बोलोगे कि how much of Indian production is compliant to WHO already, it may be close to 60-70% already. क्योंकि ये जो larger facilities है WHO compliant ही है.
नहीं, exactly. No, that's helpful. By the way, World Cup में पहला setback आज on the cusp of it है. Afghanistan is about to beat England.
Yeah, I saw that.
Interesting. But anyway, let's carry on with this session. Yeah, thank you for all the inputs.
Thanks, Sujit bhai.
So Ravikant, you have another question. So Aditya sir, meanwhile, one question is on. Yeah, go ahead, Ravi.
No, Prince, I was saying that I'm good. I'm just listening to your questions so far have been really good, and I'm taking notes. That's all I can.
Okay. So one question is, how do you think the relationship between GLS and GLP change now that GLP has divested?
यार ये तो भगवान जाने, मतलब how the relationship is quantified. So what GLP नहीं, GPL, Glenmark Pharma Limited, has been saying is that the pricing with GLS has always been on arm's length. And if it has always been arm's length pricing, then whether Glenmark Pharma is the parent or somebody else is the parent, there will be no change in the economics of the business, right? But that is the statement that has been made by the company, and that is the official statement. If you believe that, then nothing will change for both the companies, even post divestment. But if things change post, हाँ, आ रही है आवाज?
बाकी सभी को आ रही है? I'm not sure, it was breaking. Right now it's fine, sir.
Acha, okay. Okay. So I am saying that if you believe that the GPL and GLS economics have been at arm's length, as the company has been mentioning, then just because of divestment of GLS, nothing will change from an economic standpoint, both for GPL and GLS. But if it changes, once the divestment is done, then you know कि probably arm's length नहीं था. So that time will tell you. We don't know the answer to that question today.
No, absolutely. I think I agree. I think in the worst case, in a down cycle, I think 27-28% were the operating margins of GLS, and parent taking 30-35% of their sales, assuming that all that was at arm's length, and it stays as is, give or take. I think in the next down cycle, the margin should be about 27-28%. and not significantly lower than that. But if the margins go to something like 19, 20, 21% or thereabout, uh, then we would know that the transaction wasn't arm's length, and the parent was offering them a much better price than what the parent could have got from the open market. I don't believe there was any sort of preferential pricing being offered to GLS. But again, it's too speculative. I think we would have to give the transaction some time to play out, and then maybe two years out, we would know the truth. There's absolutely no point in speculating, I think.
Exactly, I agree with that.
Right, sir. So Babulal, you have a hand raised. Sir, you can unmute and ask a question,
Sir,
please.
one question is specific and one in general. Specific question is Glenmark Pharma sold their entire life science division and they have become a pure formulation company or pure research company, clinical trial company, including formulation. Is this going to be a trend among the people having formulation and API business?
Mm. No, I don't feel so. Because generally, see the reason why Glenmark did the transaction probably because Glenmark generally has a higher cost of their R&D innovation program, and they need to keep funding this cost. This is about 90 to 120 million dollars a year that they do, and therefore they need to keep funding this cost by divesting certain assets. If you see Glenmark last 5 6 years has been divesting a few assets here and there because their core business doesn't generate enough cash to be able to fund this 100 to 120 million dollars of R&D innovation program. So they need to keep divesting so that they can run the innovation program, and that is why they decided to divest GLS ka initially the IPO and then now a complete divestment. The other pharma companies don't run such extensive budgets on the innovation R&D side. Denmark, I think, is more of an exception there. Denmark and Wockhardt are the exceptions, and if you see, both of them have been divesting their other assets to keep investing in their innovation programs. So, barring these two, I think other companies will not do such a thing because it doesn't. I mean, there is a synergy in having your internal API business, both in terms of cost and
Yeah, I
supply.
agree with you.
So, I don't
Even
think
I
it.
was surprised by the sale of
Yeah.
the business. In fact, the call came from their environmental management person
Hmm.
that he had some question on environmental clearance to me. So that time I knew it was a shock to us.
Right, right. So I don't think it's ये strategic नहीं है Babular
Okay,
sir.
I have another
This seems
question.
more of a cash का
Okay,
requirement.
I have another question on the oncology products.
Hmm.
I think
Hmm.
many oncology products are still under patent, and patients end up paying something like 20,000 to 1 lakh rupees per month for a treatment.
Yeah.
This oncology.
Mm-hmm.
Oncology, I think still lot of products are under patent and which cost too much money to the
Yeah.
patient,
Yeah.
something like 20,000 to 2 lakhs or 1 lakh per month. So what is the change? Is there any change expected here? Indian companies taking over these molecules, patents coming to the end?
हाँ तो इसमें भी ना बाबूला सर थोड़ा सा nuances है. Just let me explain this to you. Uh, First nuance is if we see most of the oncology products are dispensed at the hospital's end, right? So the hospital dispenses the product. Now, when the hospital dispenses the product, what the hospital charges is the MRP, but that doesn't mean the hospital pays anything close to the MRP to the pharma company. The hospital pays significantly lesser to the pharma company because ये institutional buying process है. It's an institutionalized buying. If I'm an Apollo, I'm buying for like 35, 40 hospitals, right? So, or maybe even more now. So, I will not pay the standard rate. I will pay a negotiated down rate to the pharma company. And whichever pharma company gives me the best rate, I will buy their brand. And I will tell my doctors that these are the brand you have to prescribe. And patient, anyways, ये सब drugs hospital आके लेता है. So, you know, my doctors will write the drug and my facilities will dispense the drug. So that is number one. Number two, now that India is a signatory to WTO, uh, the patented products में pricing का challenge तो रहेगा. They will be slightly higher priced. However, our government has been very reasonable with our population through the compulsory licensing program, where the government says that if the innovator pharma company appears to be profiteering or overcharging for their product to the Indian population, then the Indian government can force them to do what is called a compulsory licensing deal. And in exchange of a 8% royalty or something, some generics can manufacture it and they can pay 8% royalty to the innovator, which I think we saw in Nexavar or something. Nexavar was, I think, Novartis's drug, or Gleevec. I don't remember which drug that happened, but it happened with one of these cancer drugs only. So clearly, oncology drugs might be expensive for patients and might continue to be little expensive. But there are systems and processes in places to keep them under check. And that is by the government in terms of compulsory licensing. The hospitals, they benefit from the sale of these drugs because they charge MRP and they don't pay anything close to MRP to the pharma companies they buy it from.
Okay. Another point I would like to make about continuous process is it is beneficial to companies on impurities yields. Also, it is quite beneficial on space utilization. Now, for a particular tonnage, you require much smaller space,
Yeah.
much smaller
True.
space,
True.
and lot more safe.
Yeah.
So last discussion we
So
had.
all a part of cost and throughput. Exactly. Yeah. So when I say lower cost, higher throughput, space, yield, less number of accidents, lower impurity, ये सब उसमें account हो जाता है.
Yeah, and
But it's a fair point.
So Aditya, I mean, do we have anything to worry about on the sector as a whole in light of Israel war ongoing?
See, the only risk which I mentioned in my opening remarks is the oil price hike, right? So oil prices are important because they impact on three sides. Number one, impact of oil prices happens on solvents. Solvents are used in the raw material. So it's a small part of raw material cost, but nonetheless it is a part of material cost. Uh, Second, oil prices impact transportation costs. So pharma, because it's a physical product, needs to be transported, and oil prices again impact the rate at which these products can be transported. And number three, sometimes it impacts power costs. So majority of the industrial power we use is coal power, thermal power, but in certain cases, crude derived power is also used. So there also, the oil price will have an impact. So the only angle which I can think of is the oil price. So if the oil doesn't flare up significantly or doesn't flare up for a very long period of time, then we have nothing to worry about as far as this industry is concerned. But if oil flares up significantly and stays elevated for a long period of time, then there may be some margin challenges. Now the margin challenges will be highest for the API companies because they use most amount of solvents and they have the highest tonnage of exports in terms of tonnage. So their transportation cost is high, and so is the fuel cost because their manufacturing processes are power intensive. They will be the most adversely impacted, the API sector, and the least impacted will be diagnostic hospitals because they don't really use any such things.
Right, sir. Another question is, what will be the effect of artificial intelligence in new drug discovery and testing, and how will it affect pharma companies in future?
यार ये मतलब क्वेश्चन अच्छा है, इंटेलेक्चुअल है, लेकिन ऑनेस्टली इन आर इन्वेस्टिंग यूनिवर्स इस क्वेश्चन का ज्यादा वो नहीं है, implications नहीं है, because see most of our companies are anyway generic manufacturing companies. So generics में अभी AI वेआई का कोई ऐसा कोई खास एंगल है नहीं. Majority of the AI applications that I am seeing, actually I am seeing on the healthcare delivery side in India. I am seeing it in hospitals, I am seeing it in diagnostics. So I think major impact of AI, at least in India, investable universe में, will be more felt in hospitals and diagnostics than it will be felt in pharma companies. And Sachal bhai, please butt in if you think I'm mistaken here. I think CRO में भी होगा, CRDMO में भी होगा, in terms of contract research and development services में भी होगा. थोड़ा बहुत एआई का इम्पैक्ट वहां भी आएगा, बट मेजोरिटी इम्पैक्ट हॉस्पिटल डायग्नोस्टिक्स में दिखेगा। फार्मा मैन्युफैक्चरिंग में और मार्केटिंग में जो हम लोग करते हैं, विच इज ब्रांडेड एंड अनब्रांडेड जेनरिक्स, उसमें एआई का कोई ऐसा ज्यादा इम्प्लीकेशन है नहीं। एंड इवन इन विद इन हॉस्पिटल एंड डायग्नोस्टिक्स, आई थिंक एआई इज अ फेयरली मॉडर्न कॉन्सेप्ट। अभी सब पायलट स्टेजेस में है, तो अभी हु इज द विनर, हाउ विल दे यूज इट, हाउ मच विल बी द आईआरआर ऑफ एन इन्वेस्टमेंट इन एआई, ये सब क्वेश्चंस का भी कोई आंसर नहीं है। So is it new? Yes. Is it exciting? Yes. Is it sexy? Yes. Is it investable? The answer is you don't know today. Sajal bhai, over to you if you want to add anything.
Nani, I agree. On the hospital side, we are already seeing the benefits of artificial intelligence in terms of results and diagnosis. It will have a, I think AI and machine learning is more like internet, right? So when the internet was discovered and developed, a lot of companies who were using that, they were the ultimate beneficiary. um, so I think a very similar scenario will probably happen in the CRO CDMO space as well, because almost every high quality company is now using artificial intelligence one way or the other, including some of the leading Indian companies. And what this software is doing is kind of in helping the scientist on one hand. It's also taking some of the low quality work away from scientists, so that it kind of frees up the bandwidth of that scientist to undertake a more challenging, higher in the sort of value chain work. And also the software or the artificial intelligence will increase the screening universe, because a scientist previously was able to do so much, and you need to throw bodies at it, and so that to increase the universe of search, that what is the best combination between the available set of molecules and the target condition. Now artificial intelligence is doing it at a wider scale, and it's doing it at a faster scale. So previously what used to take several weeks is now happening in just a matter of few days. So the scale has radically transformed, and we are in version 1 of AI today. And the way the technology is moving, in the next 5-7 years, we'll be in version 5.7 or thereabout in terms of the software technology. So it will be cheaper and faster going forward, which means that you increase your universe, and you also kind of save money, because it's a one-time investment. If you have got a subscription model, if you're a software company, you have it's kind of a subscription model that a CDMO CRO has taken, or even if they have got an in-house technology that they are continuously upgrading. um, it's a one-time investment. You're not hiring additional scientists to do that kind of a work. So maybe the hiring of the scientists going forward, so previously you might have to increase or double your scientific base because the software wasn't there. Now that the software is there, you may not be you may not be required to double your scientific base. You may be growing or adding people at a lower pace, which kind of bodes well for your margins 5-7 years out, because every scientist that you were previously adding was eating into your profitability, because you need to pay them well, right? And now if software is doing a lot of work for you, then it kind of saves that cash burn, and probably increases your margin and also increases your throughput, because now you're doing it much faster. And so larger, faster trials, which means that we should hopefully find, at least in certain cases where previously what used to take from concept to commercial, let's say 10-12 years, should probably now happen in 8-9 years. So net, I think AI is a good news for the industry in general. But again, it's very early days, and it's difficult to jump to any sort of conclusion and pass any concrete judgment. It's a moving target. Let's track it. Let's learn more about it as we go along.
Aditya, Mr. Aditya. Hello. Am I audible? Hello.
Yes, sir, you are. Yes, sir, you are audible.
Okay. What is the take on the robotic surgery taking up difficult surgeries and increasing success rate in the hospitals?
Yeah. So look, the robotic surgery I've been saying for a while. It's a very very good innovation in my view in the medical world. Uh, the challenge is that it costs a little more than the normal laparoscopy or the normal surgery. Now, whether insurance companies are willing to reimburse for that incremental cost, that is the real challenge in robotic surgery. And from what I've seen so far, while every prestigious or every large scale hospital in India has now got Da Vinci robots, the intuitive surgical robots, uh, not all the robots are well utilized. Simply because when the patient comes, he's told that the normal surgery will take, let's say, 1 lakh rupee cost, and the robotic will take, let's say, 1.5 lakh rupee cost, uh, and the patient asks his insurance company, the insurance company says we'll pay only 1 lakh, whether you get it done robotically or you get it done normally. So then the patient automatically, ends up opting for the normal surgery because robotic surgery is not, reimbursed by the insurance. What I think the insurance industry is missing here is that over a period of time, the robotic surgery reduces the social and economic cost of healthcare, and that will add up to more value for everybody in the economy, including the insurance sector. But in the near term, it turns out to be more expensive, and I think that is what is a bit of a short-sightedness on the insurance industry's part today, as far as robotic
Yeah,
surgery
the
is
question
concerned.
I asked because cousin of my son is working on robotic on software part of a robotic surgery in US. I think Da Vinci or I don't remember.
Mhm.
So the reason he
Mhm.
gave for success, if there is a 6 hour surgery, the doctors get fatigued at the end of the surgery, robots do not. So the
Yeah,
success rate is much higher
yeah,
with robotic surgery.
yeah. No, no, there are many use cases. It's not just the doctor fatigue. It's also a doctor sitting in San Francisco can do an operation in Delhi using robotic surgery because it's remotely
So
manageable.
you get higher,
So the
so
doctor
you
can
get access to higher skills.
you get access to higher skills at any point of the time, any point of the day. So there are multiple use cases for robotic
Maybe
surgery.
situation,
But challenge हाँ चैलेंज वो नहीं है चैलेंज है इंश्योरेंस रीइंबर्स कर रहा है कि नहीं कर रहा है दैट इज द
so
चैलेंज
maybe in 5 7 years situation may change.
hopefully yeah as they get more educated they see benefits of robotics hopefully yeah.
Right. So, Aditya sir, one question is around the change, another change in management of HCG. So, the person is asking about views on another change on the management.
So I think there has been news flow that CVC, which is the existing promoter of HCG, wants to sell their stake. Again, CVC has not made any such statement, but there has been media reports on that side. To my mind, it doesn't really matter. See, CVC, although they are promoters and they bought fiscal discipline to HCG, which I think was missing under the earlier management because earlier the management expanded too fast without waiting for the hospitals to break even, and that is what caused a debt trap for the company. And therefore, what CVC got on the table was brought on the table was exactly fiscal prudence. Um, I think any new management that comes hopefully should have the same sort of strategic view because any retail business, including hospitals, has to have fiscal prudence. Otherwise, you are bound to get into a debt trap. Um, so I will not be too concerned on a management change. In fact, I'll be very happy if it is a strategic management change. So if if CVC ends up selling their stake to another hospital, now that can be anybody. That can be Apollo, Manipal, Fortis, Max Healthcare, whoever. Doesn't matter because then there are a lot of synergies also on the table. See, when a financial investor like CVC buys, they can bring fiscal discipline and all, but they cannot bring strategic value to the table. Uh, when a strategic investor like let's say a Apollo or a Max Healthcare or a Fortis ends up buying a company like HCG, they will bring a lot of strategic value to the table. So I think everybody will have to wait and watch as to who ends up buying HCG. That will basically determine how good that transaction will be.
Right, sir. Another question is I need to know the impact of online buying of medicines at a deep discount versus across the counter medicine at MRP on pharma companies. And part B to this question is also shifting of brands as prescribed by doctor to a lesser priced brand but with the same constituents.
Yeah, so look, this is an age-old debate now, and I think by and large, this is done and dealt with. So most of the online pharmacies have significantly reduced the discounts that they were offering, let's say, even a year back, right? So now the discounts are only available above a certain purchase price. The ticket size needs to be more than like 1,000 rupees or 1,500 rupees, something like that. Um, Earlier it was at any price, and same for delivery cost. So earlier there was no delivery cost. Now if the order size is, let's say, below 500, then there's a delivery cost attached to the order. Um, so clearly that deep discounting is gone. In fact, most of the brick and mortar chemists now, if you go to your neighborhood chemist, he will give you 10-15% discount without even asking, because he knows that you're getting that discount on the online platform, and for him to be viable or him to be relevant to you, he needs to offer you a similar discount. So he will offer you that discount anyways, and he will offer you that discount regardless of the ticket size. If it's a 100 rupee purchase or a 500 rupee purchase, he will still offer you that discount. So that age-old phenomenon of offering deep discounts just to get the customer, I think that is history. Now these e-pharmacies also are looking to become profitable and cash positive, because that flow of free money from the VCs and PE investors is gone. Um, so they need to show profitability now to their investors, and that requires prudent pricing and not really predatory pricing, which is what I would call the earlier practice um, of deep discounting. Now coming to the switching of brands, I think the multiple representations have been made to the government by pharma companies that this is not only illegal, unethical, it's also harmful. And I think the government has been looking into it. There is a e-pharmacy policy pending, I think, from the government for a long time, uh, but it hasn't seen the day of light yet. Hopefully, we'll see something soon on that side. Uh, because end of the day, what the doctor prescribes you based on his experience, on your checkup, and his touch and feel of your condition, uh, cannot be passed on to the online platform, right? Where they just give you the same ingredient and different brand. Now you don't know what is different in the drug or not. The chemist tells you it is the same, and you believe him. Now that trust, if you have on your chemist or on the platform, it's great. You should have that trust. But somebody like me, I don't have that kind of trust on any of these platforms, because I know they are there to make money. And whereas my doctor, knows me for a long time, and his interest is that I should get well. He also wants to make money, but end of the day, he makes money if I get better, because the doctors don't advertise, right? Where does their revenue and growth come from? It comes from word of mouth. So, and the word of mouth is positive only if the patient gets well. So it's fair to assume that whatever the doctor prescribes you for your benefit. And from that perspective, I think this online pharmacy wala game is not going to last too long. Yeah, there is some impending regulation here. Let's see when it comes and in what shape it comes.
So one question is around the card therapy recently approved. So any views around that, Aditya sir?
That is Sajal Bhai still on? I think CAR-T therapy is Sajal Bhai's stronghold. He'll be able to talk about it. Sajal Bhai, are you there? Prince,
I
can you see
think
Sajal Bhai?
I can see him as a speaker, but not sure. Maybe sir is busy. Anyways, so Ravikant, any question, or shall I ask the last question for the day to Aditya sir?
Prince, I'm good. Like, I mean, I don't have any more questions.
Thanks. So Aditya sir, apart from pharma and healthcare, like broadly, how you are positioning yourself at this point in time, seeing the broader market?
हाँ, so look, I think थोड़ा market में भी over pessimism है in the terms that I agree that there are certain pockets and sectors and subsectors in the market which have become extremely overheated. And those are definitely not pockets that one should be investing in at current prices. But I feel, broadly speaking, in the market, there is still significant pockets of deep value. You just need to know. So the days of investing in headline stocks and investing in indexes and ETFs and making above cost of capital, I think those days are behind us because now these are so well discovered and so well understood by everybody that there is very little arbitrage in terms of understanding and the ability to invest in these stocks. Uh, so I think where money will be made, let's say in the next 12 to 36 months, will be some of the lesser researched and lesser known names, where I still find good value in the names compared to the business model or the um, company's potential, if I can use that term. So so I feel uh, from a broader large cap and mid cap, because see, the way AMFI and SEBI have defined this small and mid cap and large cap. So top 100 stocks are large cap, next 150 are mid cap, everything else is small cap. The problem that is happening is only 250 stocks are large and mid, and then the 6,000 odd stocks are small cap. So I think there's a lot of opportunity in the 6,000 stocks. Again, in those 6,000 stocks, the top 100 stocks within the small cap universe are again very well researched, very fairly valued. Very few of those names will have any significant value to offer today. But below the top 100 in the small cap universe, the balance 5,900 odd stocks, you will have a lot of value if you are able to analyze, understand, and reasonably predict the future for these companies. Then there is a lot of money to be made on the table. So how I am positioned and how my PMS is positioned is that uh, we have invested 90-95% across portfolios. Some of the new money may be lesser invested, but the older investors are about 90% invested, 85-90% invested. The new investors are around 20-30% invested. Rest of it is in cash. We are waiting for some uh, bad days in the market to pick more stock, and that is what we offer to our investors. See, compared to a mutual fund where when you go and invest, you get that day's NAV because you just get the ready-made portfolio. There's nothing tailored for you. A PMS service is slightly more tailored for you. So we try to uh, give you the best value that we can given the timing of the investment, and not really sort of give you a ready-made portfolio. So from that perspective, yes, some of the newer investors are sitting on slightly higher levels of cash, but we are deploying every day small amounts because we are finding enough interesting values and enough interesting stocks to invest in. Within the healthcare space, I think I am more bullish on branded generics. I'm more bullish on diagnostics. I'm less bullish on hospitals now, given the valuations, but I'm still holding on to a couple of hospital names which are deep value. But the others I'm not now looking anymore in the hospital space. Unbranded generics, I continue to be bearish. I feel that space continues to be difficult in terms of timing the entry exit into the stocks, given the cyclicality of the business. And the API space is somewhere I'm neutral today. Again, this oil price hike needs to be watched because if the oil price remains elevated for a longer period of time, the API industry may be able to see a challenge. Outside healthcare buckets where I see value are, segments where there has been no growth since the last 2-3 years. Specifically speaking, lower price, affordable segments. So, very interestingly, Prince, last 12-13 months in India, the sales of Maruti has grown slower than the sales of a Mercedes. The sales of Rolex watches has been higher than the sales of Titan watches. I'm talking growth. So growth of Rolex watches sales is higher than the growth of Titan watches. The growth of, let's say, HVACs, which are centralized ACs, has been higher than the growth of entry level ACs. Now, if you think about it, what is really happening is that the weaker population of our society, right, the lower middle income and the poor people, since COVID, they have not really seen a recovery cycle yet in their income, and they've seen some inflation. And these people now have debt, given the depth of our financial industry today. They have household debt. So when you have household debt and the inflation is there and interest rates go up, your EMIs go up and your expenditure on necessary items go up. So your disposable income, your discretionary spending dramatically falls. And therefore, segments which are exposed to your discretion of spending, like an entry level car, like a two wheeler, like an affordable housing, like wires and cables, which are all ancillary industries to all of this. So these spendings haven't really happened much in the last 3 years. What is going to change from this point onwards is I don't see interest rates going significantly up from where they are. I don't see inflation further roaring from where it is. And therefore, if income levels continue to rise, then the disposable income will again continue to rise. And as the income levels rise and disposable income rises, you will see more discretionary consumption going ahead. And that will translate to higher diagnostics, which maybe, the self-check diagnostics in terms of healthcare. It will lead to higher sales of, let's say, entry-level cars, affordable watches, affordable housing, two-wheelers, etc., etc. Whatever these lower group consumes more. Um, so overall, from a diversified standpoint, I am more bullish on smaller ticket items, which haven't seen significant volume growth in the last 3 years. They will probably do much better in the next 24 months or 2 years, because income levels will continue to rise, whereas uh, prices and inflation and interest cost wouldn't rise as much. So disposable income will rise. Does that answer your question, Prince?
It does, sir, and it really helps to us to understand the landscape. So one last call for Sajal sir. Sir, you there? There is one question if you wish to take.
Yeah, hi Prince. I'm here.
Yes, sir. So there was one question around card therapy, which was approved recently. That person is asking about the view, if you have any.
A view in terms of stock price reaction next week, it's a futile exercise. I think no one has got any power to predict those short term games, and you might as well refer the technical charts and what the momentum traders are telling you, if that's the your intent behind this question. But more fundamentally speaking, there is a lot of growth, which is the link that I shared from my BQ Prime interview a few months back. I tweeted this, I think yesterday. So if you go somewhere around 33-34 minutes into that discussion, that discussion is on CAR-T. I've also explained the fundamentals of CAR-T 2 years back in my Unseen Biotechnology webinar. So that recording is there on YouTube. If you go and just search unseen trends in bio, you'll find it. And I think that explanation is somewhere around 53 minutes into that recorded session. It's a 4 hour long session. So fundamentally speaking, there is a very 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 long runway, and there will be a million CAR T therapies. Because see, what is a CAR T? I'm not going to go into the details because I've explained this several times. Um, it's kind of a precision medicine, and it's a therapy of last resort when no other therapy is successful, and it's a rare condition. Not too many patients fortunately suffer or are suffering from this specific scenario. That's where that specific precision medicine of CAR-T will come into play. And the pricing is such that in the Western world, it's exorbitantly expensive. So what's the point of having an innovative therapy if the affordability and accessibility is missing? It's pointless, right? Because as I keep saying this, I keep tweeting this, 95% of global population cannot afford the kind of pricing which is prevailing in the Western economies. So you need to be pricing them at a price point which is much more affordable. CAR-T treatment in India should be at least 80-90% cheaper than what it is in the US. And even then, it would need some sort of a serious backing from the government and philanthropic institutions like Azim Premji Foundation, so on and so forth. And then there is a a good use case that yes, a lot of suffering where none of the existing medications, including the biologics, the MABs, etc., are effective, and that's where the CAR T will definitely add value. But there will be many different CAR T therapies across. I mean, many new indications. I mean, it all started with just cancer and blood cancer, but my research or whatever I have gleaned from various publicly available sources, there are a lot of other therapeutic areas where CAR T is being investigated as a potential treatment. So from a industry perspective, from a patient or the consumer perspective, from an affordability perspective, from the perspective of the future of the precision medicines, I think it's a great achievement. And that doesn't mean that the stock will do XYZ tomorrow, because that's not how businesses are valued. It's a moving target. But if your question is on Laurus Labs, which I believe it is, the business has had a terrible last 1-2 years in terms of the earning cycle. And to my understanding, Q1 was an aberration. I don't expect Q2 margins to be anywhere near Q1. But again, we are just 1 week away from the result season and management interaction. So let's see what pans out. And again,
Right.
no sort of recommendation, guys, for any stock that we discussed in this session. We are completely incompetent. We are not your financial advisors, and our horizon, our understanding, our cash flow is completely different. So this is just opinion and nothing else. Thank you.
So, Sajal sir, let me take a liberty to ask a quick question. So, apart from pharma and healthcare, at this point in time, same question I asked to Aditya sir also. So, how you are placing your incremental cash, or how you are going about it?
So I'm holding cash at the moment because I want to increase exposure to certain areas where I expect some sort of negative surprises going into the result season A, or possibly some sort of a geopolitical or macro event. So it always pays to have, let's say 10% cash available in your kitty at all point in time. And that's not negative, because you're still 90% invested. So you should be more worried about that 90% rather than, the fact that you are holding 10% cash. And my sense tells me that at any point in time you will find a down cycle in a business other than the current. So US generics, you see a lot of people have started turning positive. Where were they last year? So prices have doubled, and there is a fair degree of momentum, and all of a sudden there are several stories that are coming out in support of US generics. It's a highly cyclical, unless you can time it to perfection, it's very difficult to make money in any cyclical business. But in general, buying a cyclical business at the lows, when the last 4 or 5 quarters of earnings have disappointed, it's kind of generally a good strategy if your horizon is at least 3 years, because then the probability of losing money is significantly lower. So I was looking at some of the data. I mean, textile data is looking promising, and the sector has started recovering from recent lows. But if you look at the earnings, there's nothing great in that sector. And again, after COVID, the the undergarments space and textiles in general is hopefully looking promising, and that's one area to look for. There is a massive amount of bearishness across the IT space. I believe maybe 6 to 9 months later, there will be opportunities coming out in the IT space. Not in the short term, but if you can wait and not invest immediately, maybe 6 to 9 months down the road, maybe a year later, you should be able to find good opportunities in large and mid caps. It's only the small caps, the Nugents of the world and some other companies, again, no recommendation that they are doing good, but predominantly they are in the small cap space. But generally speaking, the thumb rule is wherever the last 4 or 5 quarters have disappointed and there is no structural change in the larger business economics, those are the pockets where one should be looking for investments where the balance sheet is great, and the management is still doing all the right sort of capital allocation, and then the probability of incremental losses is almost negligible. The flip side is when people lose money, so they will buy a fluorine chemical player at 15-20 times sales, assuming that the valuation will stay as is and the earnings will bail them out. Those are the scenarios where you lose a significant amount of money, and those are also the scenarios where if you don't lose money, then there is a big opportunity cost, in the sense that even if the earnings come back, the valuations are nowhere same. And I've seen some of the chemical companies is still quoting at ridiculous valuations even after the massive correction. um, be careful in what you are paying. So buy a great asset and not overpay, across the sectors, not just chemicals, not just pharmaceuticals, not just hospitals, not just diagnostics, across the board. And you will find such examples in any kind of a market, as long as you keep your common sense, EV to common sense best ratio है, उसी को follow करो.
Thank you so much, sir. And Aditya, sir, so generous of you to agree doing this on short notice. Always a pleasure listening to you, and same is from our audience. So hopefully, we'll connect with you if time allows after the results season. For today, we'll be closing today. Thank you so much, sir.
Thank you.
Thanks,
Thank you,
thanks for
guys.
this.
Thanks, Aditya. Thanks, everyone. Thank you. Bye-bye.
Thank you, sir. Thank you, everyone, for joining today. Good night. Take care. And those who joined late, the session is recorded, and I'll be uploading it over my YouTube channel. You can surely listen to the conversation on YouTube. But again, once again, I reiterate, whatever has been discussed in this session is purely educational and by no means any buy, sell, or hold recommendation. Good night. Take care.